Yeah, I'm broken, the door is closing. Wanna be a part of something more than this. I've lost control of it. Oh, seeing the stars reminds me of you. Oh, oh, oh. You left me with scars, but I know that one day you'll see it through. You'll see it through. You'll see it through. Eh. You'll see it through. You'll see it through. We're gonna live forever, forever. The afterlife. We're gonna live forever, forever. The afterlife. Talking to myself and I can't focus. Yeah, I'm broken, the door is closing. Wanna be a part of something more than this. I've lost control of it. Oh, seeing the stars reminds me of you. Oh, oh, oh. You left me with scars, but I know that one day you'll see it through. You'll see it through. You'll see it through. Eh. You'll see it through. You'll see it through. We're gonna live forever, forever. The afterlife. We're gonna live forever, forever. The afterlife. Can I be your star tonight? You fill my soul with light the day we met. I don't wanna leave your side, no. Have me by your side when the sun sets. I hope you'll still want me, I hope you'll still need me a million years from now. The seasons are changing, the nights ever fading. It's time we left the ground. Let's leave for an eternity. Sail across the lights beyond the sky. I'll be with you eternally. Addict for your love that keeps me high, keeps me high. Can I be your star tonight? You fill my soul with light the day we met. I don't wanna leave your side, no. Have me by your side when the sun sets. Let's leave for an eternity. We'll sail across the lights beyond the sky. I'll be with you eternally. I'm an addict for your love, it keeps me high, keeps me high. no one else who loves me like you used to. Some days I'm not myself, there's no one I can turn to. And I know all the feelings that we shared are in the past. And I know your relationships are never meant to last. It might take some time, but I'll be alright. I'm moving on, I'm moving on. I know times are tough, but I've had enough. I'm moving on, I'm moving on. Moving on, moving on. I know times are tough, but I've had enough. I'm moving on, I'm moving on. Some days there's no one else who loves me like you used to. Some days I'm not myself, there's no one I can turn to. And I know all the feelings that we shared are in the past. And I know your relationships are never meant to last. It might take some time, but I'll be alright. I'm moving on, I'm moving on. I know times are tough, but I've had enough. I'm moving on, I'm moving on. I know times are tough, but I've had enough. I'm moving on, I'm moving on. I'm moving on.
Hello everyone. I wish everyone a happy new year and I hope you had a good new year, you celebrated it and you're ready for 2023. It's something is wrong with the audio. Very quiet. Let me see. Is it better now? I accidentally had better now? Yeah, I accidentally had the micro from the headset, so that's not the best quality. So again, hello everyone. 2023, let's go. I mean, you know that 2 plus 0 plus 2 plus 3 equals 7, right? So this year is a number 7 year. Do you know when the last number 7 year was? It was in 2016. And as it was, this was one of my best years in life. 2016 was just a banger year for me. So I am intending to make 2023 not only a banger year for me, also I'm gonna make it a banger year for everyone here and everybody who was willing. 2014, yes, of course. 2 plus 0 plus 1 plus 4 is also 7. 2014, 2016. Banger. Okay, let's get started. So for everyone, by the way, I figured out that, yeah, it's my bad, 2016 is bad, 2014 I meant. So, so for everyone who's doing backtesting and using the script, while I was preparing for the stream, I figured out. So last time when we did the stream, somebody told me that I just go to the contract, like March contract, for example, and yeah, 2014 was also a very good year for me. So when you use not the continuous contract, when you use the single contracts, like for example March 2022, somehow the script is not working properly. So it's not drawing the IDR zones properly. That's why I need to fix that. I need to look into that. That was the first time I tried it. So whenever you do backtesting and you're using the contracts, like not the continuous contract, like the March contract or the June contract, keep an eye out because the IDR zones are not drawn properly. So keep that in mind. I'm gonna fix this today or tomorrow. I just have to look into where the problem is, because that's not really good. So as actually I wanted to do March or June, whatever you wanted, but like we have to use the continuous contract, so we're gonna just do the first week of November. And we're gonna go through this, and the next time I hopefully will have fixed the script so we can do any point in time what you would like to test. Also, I think next time when we do the next backtesting stream, we're gonna go and also do some Forex, maybe some Euro USD or British Pound, depends on. But today we're gonna focus again on the ES, because very simple, everybody knows that's that's my favorite instrument, and everybody who's starting with trading and the DR trading, you really are in a very good space if you trade the ES. There is a reason why I trade ES, there's a reason why Nindo trades ES, there's a reason why everybody else, or like most of the successful traders, also like ICT, we are trading ES for a reason. So whenever we are talking about Forex can be very easy manipulated. Everybody has heard about central banks, everybody heard about the scandals what we had in the past years when it comes to Forex. So interbank traders making agreements where to move the price, etc., etc. So there's also much more influence on price because economic news or high impact news are different than in ES. So my advice for you guys, whenever you start trading with RDR and you have the possibility, you are in a really good space if you trade the ES. We will manage Forex, but like if you want to make really like, if you want to be doomed to make profit, it's very good if you use the ES. Okay, so yeah, we can do commodity trading also, but like for me, like I want you to understand the basics first. And when you master ES, you literally can trade everything. That's not a problem. But you should like always when you trade, you always want to have the probability into your favor. So using an instrument which gives you that favor is just good for you because like you're having a higher probability to make profits. And we are all around here. I mean, I'm not for profit in trading. I love trading. But a lot of you guys are having the main goal to be profitable and to make profits out of the market. So it's just a very, very good meant advice for you. If you're not sure, if you're not already trading for 10 years, just think about it. Why is ICT trading ES? Why the master is trading ES? Why Nindo is trading ES? There is a reason for it. And it's just right now the cleanest instrument for you to use even ICT as RDR or DR levels. Okay, are you ready guys? Shall we start? Okay, let's go. So we are starting, this is the Friday 28th of October and we are closing, and this is the Sunday opening from the market. So what we can see here, and I'm going in detail explaining everything so that you really get a good understanding what are my thoughts. And also what are my trades, why I'm placing the trades, what is my thought behind it. So let's go. So we are opening with the gap. And let's see how our ADR will look like. So market continues to go down. See how it comes. Like that's really something you have to train your eye in 2023. So I mean, this is just a gap. For me, the gap, by the way, is closed when we reach up here. So a gap is closed only when we reach the closing price from Friday. It's not closed here, it's not closed there. It's really closed for me only when we reach the closing price from Friday. So we open with the downwards gap, and now we see a rejection from the gap areas to the tick. So price is continuing to go down, and now we are forming our ADR. So far, even when the ADR is not ready yet, like what we can also already see is this rejection gives you an idea about that the market and the price action tends to be more into the downward area. So this already tells you or gives you a hint to expect price action to drive lower. So we're almost done. So first of all, what I just said, we seeded, we make a new low. Here would be a fair value gap. Let's see if we'll respect that one. And we can turn on the function to color our boxes. So box color based on open and close comparison. So let's turn this on. It's also giving us red color. So now we have one hint that we will expect something to the downside because the rejection from the gap value or the gap area here, plus the early indication from open-close comparison from the indicator and from DR. This is part 2 video for those who don't know. So we have a little fair value today. We have a little volume imbalance inside of here. So let's see how price will continue now. I have extend lines. Yes. So 1 volume imbalance, 2 volume imbalance, 3 volume imbalance. So that tells me right now, I know that we will at least, I would expect something going and closing at least this volume imbalance. There is another one. So let's draw this one out. So this one is closed and we have the gap over here. So already here we can expect that price will retrace, I would say at least up till here to close this one and maybe even going higher to close this volume imbalance. So let's see. So this one is closed already. So now we are closing this one. And we are tapping into this one, but it's not completely closed, I would say. Yeah, it is. It's closed. So we see a rejection, so now we can look for a first short trade. Let's see how the next candle will look like. So we are rejecting and we are making a new low. So I missed this entry, that was a little bit quick. Maybe when you look into 1 minute chart, you would have found an entry here, but for me with the 5 minute, which I have to stick to, not really an entry yet. Look over here. Look at this volume imbalance over here, which we have from the day before. Interesting, right? So always keep an eye peeled for these volume imbalances. They are really gold. Here's another one. Yeah. So right now I don't know, there is nothing for me to trade. So let's see how price action will develop. So we are bouncing from here, from this volume imbalance. We go up and we don't see a rejection here. We don't see from the IDR level. So again, no trade for us to take. So this one is also done. Let's see the next candle. Here is a fair value gap, but I'm not interested in, and why I would be not interested in this fair value gap? Just simply because we have a volume imbalance above. So I don't want to trade this right now, even though it's looking juicy, but nothing for me. So we go up and now we have the first rejection. So this is looking good to me. Middle line, mid IDR rejection. We close the volume imbalance. We don't have any volume imbalances on top of us. So let's take a short trade here. So first trade. Gonna take it here. And we will have our stop, like me, I have my stop 2 ticks above the mid. Because like if we come higher, we most probably see a retirement setup. So I'm ready to use 2R in this scenario. And I don't need, like, if you want to be sure and you don't want to risk maybe 2R, like let's say price is coming up here and you want to trade the retirement setup. So if you want to make sure that you're not risking too much R per session, you could put your stop somewhere here. But like, let's see what we have as a target. So I don't know, new low, maybe taking this buy side liquidity. Where are my standard deviations? Would be down here, but I would say like a real low hanging fruit would be this this sell side liquidity over here, but this is only 1 to 8. So you can trade this 1 to 8 is okay, but I would rather prefer to have it at 2.0. So my trade, that's the reason why I would have my stop over here. And my target would be a new low, yeah, potentially even this low, but I would go for low hanging fruit in this case. So let's see, first trade, let's see how it works out. So nice, next candle, rejects now from this volume imbalance, you see to the tick, not going above our stop levels. Go down. Now the next candle is not even able to go above the DR level anymore. Rejection from the DR level here. And like you see how the volume imbalance is lining up together with the DR level and how price is reacting over there. So that looks good so far. When week above plus close above DR, so that would be something you can already think about moving your stop maybe on entry. I don't want to do this right now, so let's see. So almost stopped out for me. Again, we are going into the volume imbalance here and rejecting. And now, are we stopped out? Yes. Yes. So I'm stopped out now. That was the first trade. So let's put this over here. 1 trade, 0, 1, -1. So same setup. I don't want to trade it again. I want to see the next candle. So now we're getting a rejection from the opening price, but I want to see another candle maybe. We are closing below the volume imbalance again. I don't want to take it right now. Another rejection into a fair value gap over here. So now we have a volume imbalance over here, so I still don't want to trade it because it's not clear yet. Whenever you see a volume imbalance, so we have a strong move we have a strong bounce from over here. We're not able to keep the DR low levels clean, so we're coming up here. And now we have another volume imbalance over here. So still nothing I want to trade. We are closing that. We are going up again. So let's see. Okay, now I have to take it. So 2 times we're coming here, we are not able to take out the levels over here. So I'll take my next shot. So that you know, when I'm trading and I'm doing it the same in the backtesting. So I'm allowing myself a maximum of -2R for any DR session I'm trading. So if we should lose here, the session is done for me. I'm not gonna trade in this session anymore, and we will go to the next one. So we're gonna enter here, and we will have our stop this time 2 ticks above this high. And our target would be a new low. So let's see how this turns out. So again, the reason why I'm taking it now, because this is 1 time rejection, 2 times rejection now. So in my view, I have to take it. We have the confirmation to the short side, so we are looking for a short entry. This could be classified already as a retirement setup, but for a retirement setup, I like to have it more close to the DR, IDR levels. But this is technically could be classified as a retirement setup. So let's see, we are keeping the opening price line. We are going directly below the mid price, and we are rejecting from there. So everything fine so far. We are retracing again. We are bouncing now from the DR levels. So trade was already 1 RM plus. I don't like this bounce, so let's put our stop on entry. So stop goes where we entered. And we're getting stopped out again. So 2 trades. We have to break even. One profit, that stays the same. Okay, one more time, stopped out. Let's see. So now we have retirement set up. So you know what I'll do. I will enter for the retirement setup, stop 2 ticks above the DR levels, target new low. What time is it? Yeah, we have still 2 hours time, so all fine. Next trade. Again, if I lose this trade, I'm not gonna trade this session anymore. So far nice, rejection keeps going. You also, like, I'm not drawing out every volume imbalance, but here again, volume imbalance, we are rejecting from here, so I expect price to move back into this area, so at least I will get a retracement. Can happen that we will bounce from here, but I'm looking at this, when I'm trading, I'm not having them on my chart, I just see it. So here is the moment where you have to be a little bit worried about your trade, because you see a bounce from the volume imbalance, but now we are going below, so everything is fine. We are breaking the opening price, which is also in line with the volume imbalance over here. So now we go below, now we are even below the mid price. So everything looks good so far for the trade. All good. Okay, we're coming back. We are staying below the mid price, so it's okay. And we are staying still below, but we are not really going down more. So we are going up. We are rejecting from the IDR levels. Now it's 105, so we have another 50 minutes left for this trade. I like this rejection over here, so we go down. We try again to come up, but as you can see, price is not able to breach this level. So you can see like how we are bouncing in this upper area. So like ICT would call this in premium. For me, it's just the upper area of the DR, but we are like sticking to this one. We are trying to get lower, but we are not able right now to go lower. So we don't have support in price action for the lower prices, but also we don't have support to go higher. So we have clear rejection from this upper area, not even one body close below, above this level. So that's positive, but let's see. So now it's 145, we are reaching the lower DR levels. So rejection from the low IDR. So what I will do now is put the stop on entry because we are coming close to the end of the session. But I will keep this trade and see how it will play out. Again, here we have volume imbalance and another volume imbalance over here. So stop goes on entry, so we can't lose with this trade anymore. Let's make a line over here. So that's our stop level. And let's go. So nice rejection from the volume imbalance. We are staying now below opening and the mid DR levels. Rejection from the volume imbalance over here. First time we are closing below the IDR levels again. And we are coming down, we are taking out this relative equal lows. So we take the sell side liquidity. Now it could be dangerous. So if the market wants to turn, it's gonna turn now. But let's see. So nothing new. That would have been already like, you could have taken the same trade and you can take it out here. That would be 2R and below here it would be 2.7, but we are waiting for this. Going lower, lower, nothing interesting happening. So now we have the opposites, like we are rejecting now clearly from the lower DR levels, but still we are not having the power to go lower. Here, volume imbalance again, volume imbalance. That tells you like when you see this, now we're gonna see another retracement to the upside. We close all these volume imbalances and now we are in the ODR session. Still our trade is active. Wait. Oh, we don't see it here. So we're going lower, lower. We are not reaching the low yet. We are bouncing back. So we didn't take any sell side liquidity. So there is a lot of sell side liquidity down here now with all of these lows here. So let's mark this out. So we are bouncing back. Our stop is on entry, so we don't really care what is happening right now. Goes higher. Now we're coming close to our stop levels. So what do we have here? We have our mid RDR. So if we see a downside expansion model, if you want to see a downside expansion model, price has to turn around now. So we have a nice rejection. There is also the volume imbalance over here. So as you can see, to the tick, we are rejecting from here. So remember my part 3 video. So if we want to see downside expansion, price should not come and close above the 50% from the previous DR session. So what I'm gonna do now, new session, so I can't lose with this trade anymore, so I'll take an additional short trade here. Stop, we're gonna put 1, 2 ticks above the mid RDR. So and target will be the same over here. So the reason behind is relationship between ADR, ODR and RDR. So what I expect now to happening is that we will see a downside expansion model. If I'm wrong, that's fine. So what we will see then instead is a range expansion model, so we will be choppy for the rest of the day. But for now, I like the price action, I like the rejection from the gap levels over here, I like the rejection over here, I like this rejection, this rejection, this. We are driving down. I don't think that this relative equal lows will be not taken out, it's just too juicy. If you look at the past price action, so we had seen a big up move, so there is not a lot of liquidity over here. So I would rather bet on a down expansion model than I would expect a range expansion model. But we will know for sure very soon. So we have 5 minutes, that's the last. So technically ODR is not closed yet, but I still use this for another trade based on what you see over here. So let's see how it will go. Okay, that's a nice candle. So we take out now the relative equal lows. We are not hitting my targets. So let's put also the stop from this trade on entry. So both of the trades are risk-free. And let's hope that we will get down now. So here we're getting filled. So I was right. We didn't close above, so this doesn't count as a close above, by the way. Whenever you see a candle like this is the opening price. So when we're looking to the upper side of the DR, a close must be a green candle. It can't be a black candle because that's an opening price, not a closing price. So I was right expecting a downside expansion model. And taking this trade was also right. So as you can see, this time we are already stepping up the game a little bit and we are working with the relationships in between. So that means we have one trade, we have 2 winning trades now, a total of 4 trades, and this is 4.5 simply and 8, so that's in total 12.5 minus 1. So we are now at plus 11.5 R. So we can argue now, does it make sense? But like, you know, people like when they see my chart or when they see me talking about something, they're saying like, is it realistic to have a stop like that? Yeah, of course you can take your stop up here. It doesn't matter, like the R will be lower. But like why I have my stop there is very simple about what I just explained to you. So if I see that, and I know, like, if we see a close above that, I know that we will not see a range expansion model to the downside, right? So I'm already expecting, or like the trade I'm placing here is based on the assumption that based on the previous price action I have seen over here, that we will keep this rule intact with not closing above the mid of the ADR. So that's the whole point. So when I'm thinking in this way, it doesn't make sense for me to have my stop up here. Because like when we go up here, my complete idea, my whole trade idea I had, my scenario I am trading is not valid anymore. So we can argue about should it be 2 ticks or should it be maybe a little bit so that we can survive a week over here. But for me, that's just how I'm taking my trades. It's just based on the idea that my scenario will become true. And that's trading at the end of the day. So you see a scenario and you trade the scenario. If you're wrong, you're getting stopped out, that's it. Fine. If you're right, your scenario will come through like it did in this case. Yeah. Lucky, maybe there was some news, I don't know. No, it's not even a news time. Maybe some European news, I don't know. Lucky that it happened in one candle, but it doesn't matter at the end of the day. So if we close above this level, we know we don't see a range, we don't see a downside expansion model. And by that, that's why I place my stop here. So you can put it, let's say, over here so that you have a chance in case we are wicking. But like for me, if I get stopped out here and it's just a wick, I'll take the trade again. I don't really care. That's just, you know, stops are not to be tied. Stops are there to close out scenarios you want to trade. And yes, my stop placement is a little bit more aggressive than it should be for somebody who's starting with the concept. But I try to explain you why I do that. Because for me, close above here takes out my range expansion model to the downside, or my downside expansion model. And by that, that's why I put a stop over there. Because then I know, okay, I was wrong. My scenario will not become true. And if I get only wicked out, let's see, we have a wick over here and it stops me out and we go below there, I just take the trade again. I don't really care. So that's just how I'm trading. So looks funny, isn't funny, because it's a real logic behind, and it's a real logic level also. So we have the mid IDR, we have the opening of the ADR. That's two very important levels. We have the volume imbalance over here. So this is a cluster of three areas where I don't want price to go over. Very simple. And that's why I have my stop over there. Simple. So, but even if you have your stop over here, it doesn't matter. It's still, both trades will net you around 8R together. Even if you have your stop a little bit higher here, it's still 3R plus 4R. So doesn't matter. At the end of the day, R doesn't matter, because as we know, if we make 7R every week and we are after 81 weeks, you can flip your account so many times that you reach 1 million. So that's just what it is. So stops, place them as you like, but place them logically so that it helps you to take out scenarios. So that's pleasant. I like that. So let's see how price will go on. So see also, we are closing now this, and there is no reaction to this volume imbalance. So we're just closing, we're just going through it. Price is not really reacting to it. Maybe in the 1 minute charts, these equal lows are also not important, so we can remove them anymore. The next volume imbalance is over here. As you can see, we have another one over here. So let's see what we will see. So far, ODR, confirmation to the short side. So the only thing we are looking right now, it's a short trade. So we go lower, still not somewhere. So as you can see, there is no entry for me. So market is just going down. I don't get any nice rejections from the DR levels, so I can't take any trade right now, so I'm waiting. So now we come to the first volume imbalance, and as by magic, we see a rejection over here. So that's nice. Let's see. So you see how important it is to look and to see that. I mean, all you have to do really, market is moving in any direction, and you just look to the left and you see all this volume imbalance. You don't have to draw out everyone. But even when volume imbalances are filled, like up here, for example, or even here, they turn into very important areas for the algo. I explained it the last time when I was talking about the volume imbalances. So these are areas where price will always, or the algo will always look and see what's happening there. And could be points of potential reversals or turnarounds or starts of retracement. So even when they are filled, they stay important. So price is going up. See? So if there would be like any level, this is a nice rejection over here. So, but only the volume imbalance in this case, I would like to see come at least to the DR, IDR levels over here. So no trade for me yet. You see, volume imbalance filled. So now we come up and we go through here. So let's see how price will continue. We see another rejection over here, so that's enough for me in this case. What time is it? 7:05. We'll take another short trade over here. Stop as usual, 2 ticks above the IDR levels. So my usual stop placement target would be new low and 0.5. You see, there is the previous RDR SD level, 0.5. So let's take this new low and this one. Let's see how it will turn out. Stopped out. That was a quick one. So 5 trades, losers 2, and 1 R minus, so it's 10.5. So we're getting stopped out. There is no rejection, so no more trade for us. So now we are coming, and this is very interesting now. So opening price, mid price, and we also have the DR levels from the ADR over here. So again, a cluster area with a lot of areas. So we have we have the 1 standard deviation, we have the mid DR IDR, we have the DR from the ADR, and we have the IDR from the ADR. So that's very interesting. I don't want to enter right now, I want to see the next candle. But this is a very important area. Technically we have area till up here, but like, let's see what is happening. So we see a direct rejection over here. So this is going too far, I'm not gonna enter right now. Let's see if we will get a better entry. Unfortunately not yet, we are rejecting from the DR levels. And we are returning over here. So now I will just take, I don't know, like in a 1 minute chart, most likely there is a nice fair value gap inside of here. But this is enough. So we went up, we are rejecting from here, we have a clear displacement. We only need 2 candles to come down below here. Here's another volume imbalance on the downside. So overall I expect range expansion to the downside, so I'm looking for a short trade, also confirmation over here. So let's take another short trade. This will be a very boring trade, so we are entering here and our stop will be 2 ticks above this, and the target would be 0.5 and a new low like the trade before. Let's see how it turns out. Even came a little bit higher. What to do? So we're going down. Again, a nice displacement candle over here goes through the IDR levels to the DR and the volume imbalance over here. So we are literally, like, that shows you that price wants to go lower also. Volume imbalance over here gets filled immediately. So now it's already 8:30, so we keep the trade, but we are moving stop on entry. We don't want to lose with this trade anymore. So stop is over here now, and we're gonna see how the DR is forming. So we're going down. Almost getting filled, but not quite yet. So stop is on entry so that we don't have to worry. And here we're getting filled inside the forming of the DR. So very nice trade. 6 trades, winner 3, plus 4R. So we are sitting at 14.5. And this trade is done. This level is the short level. And literally we have been right, even though the DR is not ready, but you see ray expansion model to the downside as it was expected. So you see price is coming down really nicely. Quite some retracements to be fair, but overall it's a very nice price action on this day. So we filled all the volume imbalances over here. We have another buy side liquidity, sell side liquidity area down here. Don't have anything here to reject really from, except the 0.5 standard deviation. So let's see what price will do. So no sell side liquidity taken. Okay, price jumps a little bit. There is nothing for me to see why there's no area, maybe in the higher time frame, but I can't see this right now, so I don't know yet. So DR is finished now. Indication would be short. We are rejecting right now from the DR levels, so let's see if we will get some nice entry. So generally I would be short, but at least I want to see a IDR, DR in this scenario, because like this bounce is quite strong. It's like nice displacement candles, like no reaction to the mid DR and the opening price. So let's see. Rejection over here, but still we don't have any indication nor early. There is not a really important level here which we can work off. So let's wait. So now we have an early indication long. That's interesting, so to say. We are rejecting from the top, so the only level I have here, I have here my DR levels, but they are really not close. I have a volume imbalance over here. I have no confirmation to the short side. I only have the early comparison of open close, but this looks too strong to me right now. It's like, it's literally bouncing off. We were not even able to close below the IDR level, so I'm gonna wait. I don't want a long neither here because, like, as I said, range downside expansion model, so I don't want to take a long here neither. So I'm just gonna see what is happening. So right now we see rejection from the DR level, but that's not enough for me to take a short right now. So we are we are closing above the previous DR, IDR levels. So now we are reaching already, so we have a confirmation for long now. We already reached 0.5. So in this case, we have to look for a long now. So no matter what I expected, DR is telling me, DR is telling me that we have a short. So I can't trade short. I won't trade short, but like just to show you. So again, this area seems to be very important. Like we had the rejection from over here, and now we are getting another rejection inside the DR and the IDR of the ADR. So, but we only go back to the 50% midpoint and we bounce directly. I'm not very confident on this day for a long trade, so I'm just most probably gonna watch it. Because actually I was hoping that we will see some more downside and I can take a short trade. So now I can't take a short trade, so I have to take long, but I'm not feeling very confident in longs. All what I see here is just retracement and then maybe we'll go lower, but I can't trade short anymore, so let's see. We're going up, down. You could have traded like this one is a nice rejection, so we come up, we come back, we are bouncing again from the midline. 0.5 standard deviation, very low hanging fruit, but like you know me, I would at least want to have a new high. Like I said, I'm feeling not very confident in longs right now, so let's see. Could be that it's a day where the DR is wrong. So now we go below, we stay with all the candles below, now we're coming back again. Going again above the DR and the IDR. Getting rejected from there. I would have rather traded the short over here or the short over here, but I'm not allowed, so I'm not gonna do it. You could, like, if this would be a big range over here, like let's say the range from this DR would be like 50 points or something like that, then you can take such a short trade, even though it's not in line. But like this area where the price can play, I know I only have a 20% or 12% chance that price will close below this level. So if I want to short something like that, I really need to place my target somewhere here, and this range is just too small for me. So yeah, I don't like the longs, I don't like the shorts, so as we can see, but now I don't have any options, so now I have to take a long because that's a retirement setup. What time is it? Last hour of the day, 55 minutes. What to do? So we're gonna take a long position. We're gonna enter here. Our stop will be 2 ticks below the DR. 1, 2 ticks below. Based on time, so the minimum target would be here. Let's make the following. Like the target is this one, and we take partials at the DR levels. So we take a partial of 50% over here. So retirement setup, there is nothing you can do. Like for me, that's something I will trade any given day, no matter what is price telling me before. But like this is a chance, the chance is below 15% that we will close below the DR levels. So this is a trade I'm taking with 85% probability. On top of it, there are statistics, we will talk about this later, that the percentage of the close above the DR at the end of the day is around 70%. So what I know based on statistics right now is I have a retirement setup, I have 1 hour to the close, so I have a 70% probability that price will close above the DR levels. That's just math, 12 years of data. I'm not gonna question that. I fall in line with it, and that's also one reason I take this trade, because I know there is a high probability that we will close above this level, and there is a very low probability that we will close here. So you can't get it better. So this is a no-brainer trade. Nothing you can do about that. This is a trade you just take, and you will see how it works. So price comes up again. Okay, so we take a partial over here, so that's 50%. That would be, let's say, let's make it 2. I was rounding down, so we secure 2. Our stop goes on entry, and the other half of the position will go back to where it was. So session is already over. Normally I would just sell the trade right now. Like I said, I was not a fan of long overall, so I'm just gonna kill the trade here. So we just make it 2R because I don't want to calculate whatever this small amount is. So we close the trade and that's it for us. That's the first day. 4 winning trades and we just make 2R. So that's it. We can remove all our drawings now. Let's leave them because it will also remove this. So let's go next day. Let me check the chat because my chat is on a different screen. So anything unclear so far? I'm not, I'm not confident. Yes, I'm confident in my system, but I am confident mainly because, first of all, I learned it at work, but even more important, I have statistics. So I am a professional trader. I'm only placing trades if I know the probability is in my favor. I'm like the bank in the casino. The casino in roulette knows that player can win on the table, but they know they have a statistical edge which gives them the long-term profitability, because there are two numbers. They're like red numbers, there are black numbers, and there are two green numbers. So that's the simple thing which takes the statistics into the favor of the casino bank. It's literally two numbers. So out of 32, or I don't know how much, 40, I don't know. So anyway, like they have a statistical edge which is like slightly above 50% because of the two green numbers in roulette. But that makes them profitable over the long term. So I'm so confident in my system because I know the numbers. These numbers are not even, there is no question about it. They are in part 3 video. That's 12 years of ES data. So I know that price closing below this level is less probability than 15%. And that's huge. That's just like such an edge for you when you're trading. When you know you have the confirmation to the upside, a close below this level happens only 15 times out of 100 times. And then the other statistic I told you, 70% that we will close above or going above the DR level, 70%. I mean, these are numbers which are normally, like when we talk about casino, every casino would dream about these numbers. So that's why I'm so confident. I know it from work because I know how everything is programmed, but I also know the data. I know the data which I gave to you. I know that you have such a statistical edge. So, and that's the nice thing on DR, and that's why there is no other system which will give you that confidence and the probability. There will be days where you will be losing, that's not a problem. But this is just something which helps you as a trader so much. First of all, you're not trading into the wrong direction. Second of all, you have the probability stacked in your favor. And that's how you want to trade. Everything else, it's B-shit, bull. It's just doesn't make sense. And that's like big area of why I'm so happy. 70% on a long day to close above. No, 70% is overall. So there is a slight difference between long and close, but generally you can say that's for RDR session, by the way. So RDR session, once you have a confirmation probability that price will close above the DR, either to the upside or to the downside, whatever your confirmation is around 70%. That's just I'm just giving you a huge gem over there, because this is the formula to be consistent and profitable, because those numbers, they're like so top secret, and nobody ever thought about putting this into his mouth. Giving you 70% probability once you have a confirmation and you know that price will come back to DR levels. That's why I love the retirement setup so much. That's just what it is. Statistics. Yeah, generally, Luki, you should, Luki was asking if S&P is the same like SPX 500. So first of all, there's only two things you look at when you do your decision if you want to trade or to enter a trade. First of all, when you have the regular session, the mothership is the S&P 500 index. On TradingView, that's SPX. Yeah? And the future is the ES. So no matter what are you trading, it doesn't matter if you do a funded account, it doesn't matter if you do CFDs, it doesn't matter if you trade micros, you base yourself and your trade decision is based on the SPX chart or the ES. And once you have a signal in this chart, you just go to whatever broker you're using, whatever CFD you're using, whatever funded account. When this signal is coming or this signal is coming, you just enter it. You look at your chart because the chart will look the same from the structure like this one. So, and then you just enter the trade and you place your stop based on your CFD. But the decision making for trade entry should be only happening on the real ES chart or the SPX chart when you trade the regular session. Nothing else. Please invest this whatever. I don't know how much TradingView costs per month. $10, I have no clue. And $3 for the real-time data. That's the minimum if you have to invest. If you want to become a successful trader, stop looking at whatever we have there, like some CFD data feeds which are not the real one. Look at this data feed, ES or the SPX up here. That's the only thing you're looking at. And then you take your trades in your instrument, whatever you're using. If you're using ETF, it doesn't matter, CFD, it doesn't matter. Look at this chart, see this, you go long, and then you switch to your broker chart and you take an entry there and you put the stop based on the low which the CFD broker, for example, has. Okay, let's go. No more questions because else we're gonna sit at 3 o'clock in the night still here. Let's speed up a little bit. So IDR is over. So as expected, we came from an upside expansion over here. So that was the last IDR. So this was a downside expansion model, which is like kind of a retracement into the previous move. So let's see how we will continue this week. So ADR, 30, 3 more candles. So ADR is closing, is opening, and yeah, we have to take a long again if we find an entry. So confirmation to the long side, IDR is over. That's the last candle. So we have direct confirmation, so we're directly looking for a long entry. So 2 volume imbalances over here, 1, 2. So let's see if price, like best case in this scenario, price is coming down, closes the volume imbalances and continues to go up. So we will look for a long entry in this setup. So nice one. That's enough for me. So I'll get a volume imbalance over here. We are closing these 2 volume imbalances which were on the downside. We are closing this. So I'm going directly long with stop 2 ticks below 1, 2 ticks below the midpoint. Target, we have to take the standard deviation over here. Yeah, that's our trade. We are in, we are long, let's go. Let's see. Let's close. We're not stopped out yet. Let's remove this 1 volume imbalance over here. Are we stopped out? Low 8975. Yeah, we're stopped out. Stopped out now. So where is our text? So loser and 15.5 and 7 trades. Now we are at 8 trades now, right? Yes. So we will still keep on looking for a long trade. Let's see. Okay, clear rejection again. That's what I'm saying. Like for me, enough sign that market wants to go up. Everything is clear, so I lost already 1 hour, but I have to do like literally the same trade again. So I'm entering here. Stop goes again 1, 2 ticks below this, and target is like the last time, the standard deviation. So let's see. If I lose this trade, session is done, so no more trades for me. Ooh, that was close. That was literally 1 tick. So we're leaving a volume imbalance. So let's see. Volume imbalance, price returns, fills it again. So stop goes on entry now, so no need to risk anything here anymore. So stop is now here, so we can't lose with this trade. Target is not reached yet. Close, almost getting filled here. And high 3.9, and this is 3.9, so we are filled. Trade is done. 9 trades. Winning trade. Loser, break even, and 5.8. So let's make 5.5 out of it. So we are 21 now. That's it. Trade done. And how much more time? Still 3 hours to go here. So rejection from the 0.5 standard deviation level here from the IDR session. Volume up balance over here. Anyway, we are not allowed to take any short trades, so we are only looking for a long trade. So this volume imbalance doesn't even get touched anymore. So no entries for us. Like I would take maybe another entry if we come down here and clearly reject from here, but so far that's not happening. So 120 ADR is almost done. We're going higher. And now it's too late to take any trades. So there is nothing I can see, even though it's looking nice now in hindsight, but like I can't see anything. So there is no, I mean, you could have taken from the RDR the high over here, but to be fair, I was not looking at it right now. So you see the rejections over here. So you could have taken another one, but as you could see real and in live, I was not even looking at it right now, so I missed that one. But that could have been another nice entry over here, but I didn't see it. So let's continue. So now we're coming to the 1 standard deviation, you see that, to the tick. And again reaction, so we are rejecting from this one for now. So now we are already in the ODR session. Again, nice rejection from the one, and now we are breaking through it. But you see that? Like even the standard deviation levels are very important. So price is coming down. So now, again, now we have the opposite. So RDR here. This one is a contraction ADR session, and now we are squeezing to the top. So even though I don't even know what is happening right here, I would look for a long entry potentially. So let's see if there is something interesting for us. Let's mark it out. So this is a very important resistance area. And over here. So we also have the 0.5 standard deviation level over here, which is also very important. So let's see, it's 3:30, so another 30 minutes. Let's see how price will go on. So we close below, immediately go back above the 0.5 standard deviation. We try it again, we still hold the price here. So let's see. Price is coming up there, 0.5 mid, and we have another 10 minutes. So based on what I just said, we can also extend these lines here. And this one goes aligned with the mid levels over here. So based on what I said, so RDR session, small ADR session inside of the RD session, that's like the contraction model I was talking about last time. So, and then like this means contraction always means market is fueling up, and we're gonna see one squeeze move to one of the direction. It could have been to the downside also. Like the model is not telling you in which direction. For that you have to see how this session is playing out. So in this case we have an upside squeeze. So I'm looking for a long entry, and here already you could take a trade based on this assumption. I'm not taking a trade here, but that could be an idea over here to show you a little bit how you can even trade before the DR session is finished. You don't have the probability because the DR is not given here, but that would be conclusion out of the relationship between the DR sessions. So taking a trade here with long stop below here would definitely not being a bad idea. For me, I want to wait a little bit longer, and that's wrong obviously, as you can see. That was not the best decision. But anyway, so you see what I meant? Like taking this trade would have been definitely a good trade to take. So DR session is finished and we already have the confirmation. So we are looking for longs only as expected. So we have a little volume imbalance here, below here. And there are two, like we have this one and we have this one. And that's also the 50% level. So let's see if we will get a retracement into this area. And if yes, then we will take a long. Directly going to the next 1.5 standard deviation level. Here volume imbalance, so we know price will come back. So if I see a clear rejection now that we already extended, I'm gonna look at these two levels and I'm gonna see if there is a clear rejection. Maybe I will enter a long directly here. Else I want to see price come below here and see what is happening. So even maybe this area could be interesting. So we have the one standard deviation and we have the opening price over here. So these are the three areas. Let's look if we see a rejection here. Let's see if we see a rejection here. And then last point we're looking for long would be here. So price is retracing. So this is not a clear rejection over here. We stay below this volume imbalance. And we are not clearly rejecting. And now we are breaking through. And we are coming directly with one candle to the levels I said could be interesting. Still not enough for me to take a trade yet. We are breaking below. Still nothing to trade for me. Now we're coming again, so we took this level, we are coming up. Still nothing for me to trade. We are going up to the DR levels and yeah, still nothing for me to trade. No. So now we have 1, 2, 3. So I guess I will take based on the rejections over here. So we try to take this level, we are not able, we are taking it immediately back. Price again tries to come down, gets bought over here. So price action continues to go up. We are seeing rejection over here, but we are looking for a long, so we are not really interested in the short rejections. Again, price is driven down and rejects exactly from the open price and the one standard deviation. So I will take a long here. And I will put stop the stop below 2 ticks below this last low. And let's see. Target would be a new high. Let's see. See, that's a 2-hour trade. Let's see how it works out. Okay, price goes up, that's nice. And we are filled. So, next trade done. That's it. So we have a new high, 1.5 standard deviation. Let's see what price will do. And we go up, more up. Nothing happening interesting here, as you can see. Anyway, it's 740. So I don't like entering. I mean, there are days when price is really expanding to the downside and you could re-enter at those levels, but that's not usually what I like to do. I do expect that this level will hold. So I don't think that we will see a big come down, but still there is a volume imbalance over here. There's another volume imbalance over here. This would be a very strong area to not go through. And that's it. So let's see how it turns out. And we are waiting for RDR then. So it's 8 o'clock. Price continues to go. As I said, like I expected this level to hold, but I wouldn't take a trade there. And exactly -2, 2 standard deviation. That was a quite nice ODR session and ADR session so far. 920. So now we are starting into the RDR session, and in general I would expect price based on this model. So two things you see here. So first of all, the model is telling us we are going upside. So this is not range expansion model per se, because this was happening inside of the RDR, but it's the contraction, so we have the squeeze to the upside. So what is very important to look at right now is over here. This was like a significant high. I don't know, I can't look. Yeah, like this was a very important high which was taken. So when you see this, you always have to look what price is doing next, because like this was a significant high which was broken, liquidity was taking, 2 standard deviation reached. So let's see. That's definitely something you have to look for and understand price also. So the RDR is opening and we are coming down here. We are reaching these levels over here. Now I was clicking too fast, because actually what I would have done here, I have to go back one candle. I was clicking too fast, sorry guys. So this candle here, so we have this one here, we have 0.5, we have the IDR levels, we have, if I would extend these lines, we would have this here. So I would take a long here, just based on what I said. So there is a chance that we will expand higher, but these levels have to hold now. This is the level which price has to defend and the algo has to turn around, because that's just the logic behind all what I'm teaching. So I would take a long trade here, directly stop below this level, 1, 2 ticks, and my target would be up here. But as we know, I will get stopped out at the next candle, but like I wouldn't know that, but like I was just clicking too fast, so that's why, just to make everything correct here. So I would lose 1 hour here with the next candle, so I would be stopped out. Loser 4, total 11, and -1 is 22. So now this is a very important point, because we are literally broke through everything which should have helped the algo to turn around. So we take out this cluster, we take out this cluster, we are breaking through all the levels from the ODR session. So now it's looking quite bearish. And like you see the effect from the buy side liquidity up here, which was really important. That seems to be like a very important swing high based on the reaction of price. So let's see. Clearly RDR looks very bearish. So let's see what we are getting. I can remove these lines for now. And we're gonna see how price continues. Wow, 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 wow. So what time is it? 10:10. 10:20, one more candle, and the DR is done. So as we can see, price definitely wants to go lower. We take out the sell side liquidity even over here. So you have to understand, like, that's why I'm talking squeeze. That's why I was not talking about range expansion. This squeeze model is literally to engineer liquidity, and that's exactly what we have seen. So we have the squeeze, like imagine that there are stop levels all over here. So people who were shorting from these levels, they all have their stop somewhere in the middle, like either here, here, depending where they have their stop. It doesn't matter where they are. So this squeeze tells us that we will see a squeeze reaction into one direction, and that's exactly what we have seen. So we are squeezing, literally we're collecting every single stop on the way up here. So all the people who had their stops and still in their short trades, they all get stopped out, and we liquidity is getting engineered. And on the other side, people who are going long and still are long and not selling up here, they will be having now their buy stops or their sell stops for their buy trades over here somewhere. So we squeeze up, we take all liquidity plus the liquidity which is sitting on top, which is most probably the biggest one, and then we reverse and we go down and take all the people who have been long and have like staying in their positions and not taking low-hanging fruits. All of them will be killed in a very short time period. So that's liquidity engineering, and that's like also the contraction model here. Contraction model, expect squeeze reactions, and that's a squeeze reaction. So we are squeezing literally the short sellers over here, and once we reach this area, we are squeezing for the buy sellers over here, the buy orders we had over here, which have their stops over here. So we have no confirmation. Let's see how price will continue. So now price is just turning up, nothing special here. We have here, we have the IDR session low, so normally price should not go over this level anymore if we want to continue short. This is a very good level to reject from. I saw it too late, so no trade. We are going down. Not really any good rejection. So now we have confirmation. Now we are allowed to look for trades. This could have been a potential trade, by the way, here. Even without confirmation, I mean, very clear. But it's also not the clearest trade over here. So now we have confirmation. So now all we are looking for is short trades. So nothing interesting yet. We are returning here, but we are not able to close above the IDR levels. Nothing for me yet. There's one rejection, I don't know. Maybe I want to see one more. There are a lot of rejections over here, but it's still looking not interesting to me. So we go above, and I guess now I have to take a trade. So we have all these rejections down here, and there's also volume imbalance if you look closer over here, which is like by magic. You have to ask yourself, how is this possible that they are lining so much with the IDR level? It's literally to the tick on the IDR level. We see the rejection over here, that's also the IDR, so we'll take a short trade. And we will enter here. And our stop will be 1-2 ticks above this volume imbalance. So we are going one more time into the volume imbalance here, getting rejected again. Our target would be of course 0.5 and a new low. So trade would be already 2.5 R and plus, so we're gonna put our stop on entry. So entry on stop, stop on entry. And stopped out, so break even trade. $12 trades, break even 2. So we're going up again. Let's see if we will get another rejection from this level. Now we are staying above, we're going below. That's like this circulation around the DR line. I normally don't like it. I don't like to trade it that much. So I want to have it at least going up here to take another trade. So again, let's see the next candle. That's the 1, 2, 3, 4, 5. That's the 6th rejection from this level. And the 7, so we have to take it short again. Doesn't help. So we're entering here. Target 0.5. And we're gonna take 2 ticks below this level. 1, 2. Let's see. And stopped out. Loser 5, 21. Okay. So stopped out. Next trade coming. So we close above it and we directly reject. So if you have looked at my backtesting videos, like this is a pattern I really like to see. So we go above the IDR level and then we immediately take it back with the next candle, and the candle which is taking us back is bigger than the candle body of the one who was closing above. So I will enter a long trade again. And my stop will be above this high now. So target, oh, that's a long trade. Nope. Short, sub, and target will be 0.5 standard deviation and a new low. So now nice rejection again, and we see the same like the disband. I really like the candles over here, so that's normally a good sign. Let's see. We are staying below the DR levels now. What time is it? 20 minutes till market is closing. Another nice rejection from the DR levels. It's 10 minutes to close. Market closed, so we are selling over here. That's at the closing price. That's 1 point, let's say 1 hour, that's fine. Winner 7, trades 14 and 22 hour. Good. Should I have hold it? Come on. Looks like opening gap here from the closing to the opening. No color. So nothing happening. So you see we are going back to the gap. We are closing it and we are in the ADR session. Let's see. So ADR is finished and we are confirming. We are confirming literally with the second candle. So we are looking for long entry now. Look how the ADR DR high aligns with the DR low from the previous RDR session. So previous RDR session is over here, and look at the DR and how the levels align together. So we're looking for a long entry right now. Let's see if we will get one. What day is it? This is only Tuesday. When did we start? Monday? It's only Tuesday. can't be. That's just 2 days and it's already 1.5 hours. So we could take a long over here if we come back over here. So far nothing here, nice volume imbalance, not closed yet. Now they are closed. We are still not coming down to this level. Nothing for me to trade yet. No. Nothing. There's just nothing for me to enter here. I mean, if I want to enter, I want to enter at significant levels. I don't want to just enter here. I mean, there is a fair value gap which would have played out quite nicely, but that's not typical the entries I take, especially not in the ADR, which can be a like very rangy session also. What time is it? 1:20, almost done with the ADR, so no entries for us. 2 o'clock. Now, so now we are at the ODR session. So the ODR is returning into this one, very small sessions, and is happening inside now of the RDR session. So 2 potentials right now. So if it stays like that and we extend to the upside, we have a potential for a range expansion, like for an upside expansion model. If we stay in this range and we will expand to the downside, it's gonna be a range expansion model. So it's not very clear right now from the price action. So let's see how it will turn out. So now we have an early confirmation with the close about the IDR. So I think for now I would expect price, like technically I would like to see an expansion to the upside. Let's see if it's happening. Yep. So now we have confirmation to the long. Nothing to enter yet for us. So when you look down here, that's like what I said. The only reason to enter down here would be potentially this volume imbalance, but even this one is not be taken by price. I mean, it's touching here, but you have to be very confident to take a trade over there. It would be nicer like if this volume imbalance would be around this mid area, like this for example, and price comes down here, then this could be a potential long entry even before the ODR is finished. But how it played right out here, it would be just literally the volume imbalance which is supporting this long trade. And your only idea would be simply that you speculate on a upside expansion model. But that would be like a risky trade for me. It's still a valid trade, but like for me too risky to be honest. Would have played out even though. So we are looking now for a long entry. And here is another a double volume imbalance now. Now let's see if price comes back. So volume imbalance is getting filled. We see rejections now from the downside. We are pushing right into this one, so that would be like your first chance, or like my first thought would be entering here. We have another volume imbalance over here. So I guess I will take a long trade here. Stop 2 ticks below this volume imbalance. Let's see. Target new high. And stopped out. That was quick. 15 losers 6 minus 1 hour. Quick trade. Yeah, maybe I should have looked at this, because like that's like 3 equal lows down here. So I guess we will go down a little bit more. I didn't see that, to be honest. But that could have been a hint. So either my stop placement was bad in this case because I didn't see it, or you wait a little bit longer. But this was too strong looking for me with this upside move. But yeah, like technically you could have seen that you had the volume imbalance, or I had the volume imbalance down here. So I could have avoided this trade potentially. But like hindsight, yeah. So now we have another volume imbalance over here. Now I want to see, at least I already lost 1 hour in this session, so I want to see at least another rejection from the mid before I would take a trade. So no rejection, we are filling the volume imbalance but rejecting from it. And we are coming now into the area of retirement setup. This rejection is too strong right now for me, so I want to see another candle. Okay, now I have to take the retirement setup, doesn't help. Long entry here with the close. Stop 1, 2 ticks below. Target at least the other side of the DR. Was this already? No, we are still in the trade. So 2 times rejection from the DR, we are wicking through it. We also have the volume imbalance, which is getting filled now. So aligning with the DR, that's areas I really like. So there is a high potential that we will go up now. It's the volume imbalance together with the DR levels. We are wicking, we are closing, and now we are still not closing below the IDR level. So that looks good in my eyes. Let's see. Price reaches 0.5. Goes down again. 0.5 again. We are closing above the mid levels now. So now the trade is already 3.5 RN plus, so we put the stop on entry. There's another volume imbalance, so it could be that we get stopped out when we are wicking, but like I'm not allowing myself to trades which are like 3 or 4 or 1 RN plus. I don't allow them to go into minus anymore, so I have to put my stop on entry. So stop on entry now. So we are closing the volume imbalance, that's good. Closing, we are going back into it, closing inside of it. Again, getting rejected, so it all looks good so far. Again, volume imbalance, all good. Again, now we are not even closing anymore, we are going above, that looks good, but we are still below the 0.5, so now it would be nice if we would extend a little bit to the upside. And there we're getting stopped out. So a quick wick. I was aware about this risk, but it doesn't help. So nothing changes here. What time is it? 6:25. So I guess we have to take another entry now. Still retirement setup, so we'll try it again. Same stop, 1, 2 below. So that's what I mean. At the end of the day, I moved my stop and I have to re-risk another hour now. So if you leave your stop like it is, you would have been not stopped out right now. But like for me, that's just the rules I follow. I don't allow trades to go into minus, even though I'm aware that I'm getting stopped out and I'm most likely gonna re-enter because it's still a retirement setup. So that's just on as a note for you. So let's see. And stopped out. So now I think that must be 2R this session, so minus 2R I think, if I'm not mistaken. Loser 7 minus 1R, totally 17. So I think I lost 2R, am I right? Ah, that's FOCM day. I didn't know that. Doesn't matter, we will just continue. I lost 2R, right? I lost already up here, right? Yeah, okay. So that means done for the session, no more trades. As choosy as they might look, I'm gonna skip. Also, okay, we are breaking now, so it's a false ODR session. And as we can see, we are reaching now here. Most likely we're gonna reject here. Anyway, I can't trade. So just for information, like you normally when you have 2 days, when you have a day where we see both sides, one of them is gonna be fake. So I would suspect that the long was the fake out, but it could be also the other side around. So you don't know. If you're looking at price, I'm most likely to expect price to go lower. But you could also look at the rejection here and take a trade based on that. But actually how it's looking for me right now, it seems to me more that the upside from the ODR was a fake. That's how it's looking right now. But nevertheless, like there is 2 reaction to these levels again. So if I would have not lost 2R already, I might consider a long over here. But I can't anymore. Okay, so give me 2 minutes please. I need to go to the washroom for a second. I'll be back. Get yourself some snacks, something to drink. I will be back in a minute. So back I am. Up. Let's continue. So as it's FOCM day, we gonna be careful. Thank you that you mentioned it. So let's wait for the IDR session to start. So big down move here. So IDR, we are going down lower and lower. So IDR is forming. It's going lower as we expected. Like I said before, it's like from the total price action, we take out here the buy side liquidity, and from there price is going down. So also like the relationship between the models. So this looked like a range expansion, like an upside expansion model, but the IDR, so as I speculated and I took the trades over here, it was not working out. So also this one doesn't have a 100% hit rate, right? So IDR, but it's FOMC day, so you shouldn't trade anyway. That would be a day where you would be not trading. So IDR session is over. So there is no confirmation, not an early indication. So as it's FOMC, we are skipping to 10 o'clock. So we see a confirmation to the downside. Market rallies up. And it should be at 2 o'clock is FOMC. So another half an hour before the news or the rate decision comes in. So now we will see rate decision. As we see, we have a confirmation here, would be retirement setup, but it's FOMC, so I'm not trading it. Oops, there is the decision. So we extend up here, 2.5 rejections over here, but we are not trading it. As we know, FOMC is a 2 phases event. We have once the decision, and half an hour later we have the press conference with Powell. So we're not taking any trades here. So now it's we go up here, we are rejecting from this level, which is also this levels over here. This is fine and quite clear. So short would have been an option if it would be a normal day. So let's see how it continues. Coming down, coming down, coming more down. So no trades. It's not worth to trade inside of this for me. So let's see. So now it's 1 hour, so market will return to normality, hopefully. Let's see if we will get a good trade. So we have confirmation to the downside, confirmation to the upside, and again confirmation to the downside. So what I would look like now, if I want to trade, I would look for a short entry if I want to trade. And I'm not taking a trade here because, to be fair with you guys, I know where the market will go, because FOMC, I know the patterns. So I'm not taking a trade here. I know that the market will plunge from here on. But that could be here, this could have been the reason. So confirmation first, then we have the fake. We clear out all the liquidity to the top side. We are rejecting from this level. So here you see clearly the rejections from these levels. Market comes down, touches down to the low IDR, comes back again, gets rejected again, and we are getting another confirmation. So this could have been a point where you could enter into a short trade, but I'm not taking any trade here because I know that the market is plunging after this FOMC. So we'll just let it play out. Market is closed. That's it. No more trades. So let's see for the ADR session now. So there is a nice volume imbalance over here. So ADR is closing and no confirmation, no early indication. So now we're getting the confirmation for long, potential long entries. Target could be here. Let's see if we will get an entry. Volume imbalance over here. Not getting any entries yet. Just market goes up and up. You see, like we are filling this and now it's using the volume imbalance and rejecting from over here. Still no entry for us. Nice fair value gap over here, but we are not allowed to short. So we are filling the fair value gap here, but again, we are not allowed to short. If you want to long, but I wouldn't do it, here is another fair value gap for longs. Not interesting for me. So nothing interesting for me to trade. So I'm skipping forward, nothing interesting. Market comes down, ADR session is over. So based on what we have seen, and it was FOMC, I need some more, like this is not enough for me to take a trade before I see the ODR session. Because right now, my question would be, will we continue to go lower or will we go up? And right now I can't tell that. It's very hard for me to predict at the moment. So I'm gonna wait for the ODR and show and want to see what the ODR is telling me. So we are rejecting nicely from down here. So far at least. Looking quite good for a long, potentially going maybe up here or something like that. Let's see. So we don't have any confirmation here. We get an early indication for long. Let's see if we will get a rejection, but like I don't think I want to trade it right now. So no rejection from the midpoint. Now we have a rejection, but we already go below the DR levels. Let's see, maybe next candle, maybe it's worth to take a long. So now we're getting confirmation to the downside. So let's see. So we're looking for shorts now. We have a volume imbalance over here. Well, let's see if we will get an entry now. So we are returning, we are closing the volume imbalance. And there is a little rejection, but that's still not enough for me. here you see we have another volume imbalance. Let's see how the next candle looks like. Another rejection, don't like it. We're making a new low. We are still battling here right now with the ADR lows. So we can't take a long trade, so I'm not gonna take a long trade here, obviously. And for short, it's still not enough for me. So we are bouncing away from here. So what could be potential entries? So we have the minus 4.5 standard deviation and we have the midlines here. There is also a potential fair value gap over here, which covers both of the areas I just said. So this area could be interesting. Let's see if we will get it. We close above the IDR and the DR low. So now we go into this fair value gap. We go into the fair value gap. And we are getting rejected here. I still want to see another candle maybe. Well, that's good for me. So, gonna take a short trade here. Stop 2 ticks below, above the mid IDR. Target would be a new low over here. Next standard deviation would be 2. No, we have to set it up. No, that's too far for me. So target over here. You could go for the next one if you really expect market to go lower. Let's look at the bigger picture. So that would be the new low. That's fine. There's also 2.5 standard deviation over here. Let's leave it there. But potentially you could even target maybe the next standard deviation level. But for me, the new low and the 2.5, that's an interesting area. So that would be enough for me. Let's see if it works out. So directly, nice rejection over here. Now we are coming back again. Another nice rejection from the standard deviation levels now. And we are getting filled. So where is my text? There. That's trade number 18. Winner number 8. And 2.5 plus R. That was a nice trade. Like what I said, like fair value gap, minus 4.5 standard deviation, plus the mid-level, first rejection from the mid-level, the second rejection from the mid-level inside the fair value gap, and then we are rejecting 2 times from minus 4.5 before price goes down, makes the new low, takes out the sell side liquidity. We have our profit target over here. We are closing now below these 2 levels from the ADR, so all looks like we will see more short potential actually. So let's continue. It's 5:50, so enough time. So now we have taken this out and we are rejecting from over here. So we are not able to close about the DR, IDR levels. Also here, ADR, I just mark it out for you that you see it. And how random it is that the low of the ODR is exactly the same like the high DR of the ADR. So I'm gonna take another short here. Gonna enter right here at the close of the candle, stop 2 ticks, 2 ticks above the DR, low of the ODR. Target now would be the next standard deviation, or if you like, you can make the target with the new low. For me, I will just go now with the next standard deviation. Let's see. And nice rejection from this level. I mean, like, this is all confirming what you think. So we have the close, we take it this back, we are overall in a short movement if you look again at the bigger picture. So let's see if we will go lower. So if we would have our price target over here, we would be filled. We are not getting filled yet. And here is the fill. So another nice trade in the ODR session. 19, winner, 9, and 5R, 27.5. So that was another nice trade. It looks to me, it looks really like we would go lower. There is a volume imbalance over here, which is already, maybe we'll go back here, but like price seems to be very heavy to the downside. So the algo wants to go lower. I don't even know if we will come back up here. Should we come back up here, I'm most likely gonna take another short trade. But as expected, we are not coming back yet. And look at the reactions here. So like, look how the standard deviation levels matter to the price. Yeah. So you don't have to believe me what I'm saying. Just look at price. Like, look at the reactions here from these levels. Look at the standard deviations and how precise it is. I'm not even like, this is most of the time by tick or maybe -1 tick. But it's so precise that it can't be random. Even though I like to say everything is random, but it's not, as you can see. Look at the rejections here from this level, and then now we break down, and now it becomes like almost like a barrier for price. Comes back up, and directly gets taken out. Just look at this. -6 standard deviation and direct extension to -6.5. So now ODR is done, so we are waiting for the IDR session now. So IDR is starting right now. And again, look at these levels, they are still important. That's like really, really interesting. So IDR session starts as expected. What can we say about the model so far? So we go above, we go below, so we'll expect a choppy day. So if you see this model, small ADR going up, the box goes up, but price extends to the downside. So just based on what I see right now, you can expect like a choppy day, like this, and then down again. So this will be not a one-sided movement. I mean, I can be wrong, maybe we'll just go lower, but I don't see that. If we really want to go lower, we would have the ODR already going below these levels and not fighting here so long before we extend to the downside. But let's see. So also -7.5 standard deviation, you will not see that often. Like, I mean, I know it's FOMC, but like -7.5 standard deviation extension is quite a number. So it's nothing which is happening every day. So RDR so far down, and now we're going up. And more up. And it's close. So we don't have confirmation yet. Let's see. Don't want to do anything right now. So now we have a confirmation to the upside. So that means we are looking for a long trade. That's how we play this. Let's see. So we are coming close to these levels here. Let's see the next candle, but I guess I would like to long very quickly. I want to see the next candle, not that it's just a fake and we go down. Let's see the next candle. Next candle is going up. So let's see. Rejecting from the IDR levels. We are coming back to the opening price, and now I'm gonna take a long trade. Close and target 2 ticks below the midpoint. 1, 2. Target would be a new high, and potentially you could like, now let's make 0.5. Yeah. Why I was thinking about putting a new high. So sometimes I'm even quicker than I can explain it to you. Look at these levels. So if price is not strong enough, like this is a very strong area here. So the low-hanging fruit in this case would be definitely the new low, because to reach the 0.5 standard deviation, we have to break through this. We are like in a strong downtrend, so this area will be a difficult area for price to take. So that's why, and actually the more I'm looking at it, I want to take profit at the new low. But that would be the conclusion, the logic thought. So to reach 0.5, it has to go this one. We are coming from FOMC. Look at this price coming down. So it's better to take the low-hanging fruit here instead of speculating for the 0.5 standard deviation, because just price and price action seems to be very to the downside. So it also means, like, that's the point, you know, if I would not have the RDR or the DR concept at all, so my guts would tell me, but I'm not listening to my guts when it comes to trading, but like my guts would tell me to look for short trades. That's just what it is. Like most of the people who don't know the DR model or believing in something else, they most likely would look to short right now somewhere, which is okay. But like for me, DR is telling me, okay, I'm just looking for long trades. It's just for this session. It doesn't mean that price can go down lower. That's always a possibility. But I know that the probability is below 15% that we will go lower. So, and that's what I'm following. That's like the heart and the soul of my trading. Even though looking just at price action, I would expect price to go lower. But DR is telling me, no, you're looking for long trades right now. So if I would be very, very short focused from my buyers, from what I see, I would just not take any trade. But I have learned over so many years that trading against the DR, it's just the biggest mistake you can do. Like if you're aware, if you don't know DR, it doesn't matter. But just statistic wise, trading against the DR, you're gonna lose money. It's like you have a higher probability to go into the casino and get a millionaire in the casino than your probability is when you trade against the DR. If you're trading against the DR, you will have a lower probability than getting millionaire in a casino. Like mark these words. Trading against the DR has a lower probability than winning millions in the casino. And that's why I follow it, because it's just what it is. So again, logical thought, why I want to take the target over here, because this area is very important in my eyes, and price will be having a difficult time to go through. So let's see. Nice rejections from the open price again. So price goes up, closes above the DR, that's a positive sign. Not closing below the DR anymore, that's also positive. Now we are coming back again. This close, that's again, like I talked, I don't know, it was like some trades before. Closing below, immediately retake, bigger body candle than the candle before, that's a positive sign. So now I don't want to have price coming below this level anymore, that's why I'm putting my stop on entry. So if we get stopped out, we are not losing anything anymore. And we are reaching the profit target. And we're getting filled, 10, 20 trades. And 2 hour plus. That's it. And as you can see, price is already reacting to what I said. So far we are not able to close above. Let's see if we would have hit it. And again, rejection from over here. Just look at it. I mean, you must be blind if you can't see that reaction. I mean, for me, that's, I don't know. It's like looking at it and I'm just realizing how amazing it is. Because just price. I mean, what can I say? It's just amazing. So what time is it? It's 1:20. So no clear rejection, so no need to re-enter again. And this rejection, like based on my overall bias, here is also like a volume imbalance, a small one. It's just like by magic, all of these areas are lining up. And you have to ask yourself, if you don't believe me what I'm teaching, you have to ask yourself, how is this possible? So if you don't believe me, if you don't believe in DR and you think it's whatever, but like at one point you have to look objectively at things. And how is it possible that everything aligns up in this area? Like literally everything. And if you look at this, you have to come to the conclusion at one point that it's not by mistake or random. So something what I'm teaching you about the DR levels and the DR as it is seems to be really impacting price every day, every minute, every time you're looking at it. So you don't have to like me, but you have to see this at one point. And the more you will look into your charts and the more you will look at price action, you just figure out that it's just the simple nature of the algo and visualized with my DR concept. So anyway, no real rejection over here. There is a little DR, IDR rejection, but I don't like it, especially with what I said over here, so I'm not taking a trade. And here is a nice fair value gap, but I don't like it. So price comes up, closes above, nice rejection from here, 3 o'clock. I still don't want to trade it. If I don't trade it, it doesn't mean that you can't trade it. It's just like I don't like it, and the reason which is taking me which is making me not taking any trade is this area up here. So if this area would be not existing, I would take this rejection over here. We're coming back, we're closing above, we are rejecting clearly from here. Either I would take a trade here, or I would take this one to the long. But like this area is stopping me to take any long right now. And I can be wrong. It's I'm like, as you can see, I'm not winning every trade, but I don't need to win every trade. It's just not necessary. In this case, what time is it? 50:50, 15:50. So we are coming down to the level and the session is over. So it was right, my idea was right, and this level still stays strong. So now, last day before we end the backtesting session, it's already 2.5 hours, guys, it's crazy. So I'll speed up now a little bit. So price is going down. Nice volume, opening gap over here. Let's mark this. So let's see. So what we have, who knows it? Who can see it? What's that? Let's finish the ODR quick. So what do we have here? Who can tell me? No, that's not expansion. That's contraction. Correct. So we have contraction inside the RDR. What did I say about contraction? What are we expecting when we see a contraction inside the RDR? ADR, this is ADR, yes. Yes, and what we like when we see a contraction model, what will be the conclusion out of it? Yes, we will see a squeeze either to the upside and to the downside, or to the downside. Exactly. Squeeze it, baby, squeeze it. So we already have the confirmation to the, no, we don't have a confirmation, we have an early indication so far. So as we expect a squeeze, we will wait a little bit. We are waiting for a confirmation before we do anything. So still early indication. And now we have the confirmation to the upside. So we are looking for a long entry. Potential areas. Here is a little volume imbalance. That could be interesting. Anything else? No. Normally I would suspect that this area should support price now. The gap should be supporting price if we are looking. So this will be a strong area. So any return to the IDR or down below here, I will take long. So confirmation done. We have a volume imbalance over here. So like I said, I go directly long. I'm expecting a squeeze. DR is telling me, ADR is telling me I'm looking for a long. This, as I explained, gap plus IDR plus volume imbalance below here. So I'll take a long right now. Stop goes 2 ticks below here. 1, 2, that's it. As we are expecting a squeeze, my next target will be at least the DR level over here. Potentially, if you expect a squeeze, you can have your target over here, but I'm taking the low-hanging fruit today. So I at least want to see this DR levels, let's mark it out, to be taken. Let's see how it turns. So as we can see, reaction directly from the IDR level plus back into the volume imbalance. We are not able to close above it yet, so it's not done yet. So rejection again, now we are closing above it, that looks good. Return. Still a little bit shaky. Still staying above the IDR. See how this volume imbalance like is now supporting price. Every time we come there, the algo turns on and we go up. So that's nice. Stop on entry now. Let's see how far it will go. You see that volume imbalance, price returns to it, closes it. Here another volume imbalance, so I don't worry about price right now because I know we will go up, and once we come up here it's most likely that we will go higher. So as we can see, that you see how squeezy it is? It's squeezing, so explosion into one direction, and we are getting tagged. We are out of the trade. Nice trade. 21 trades. Winners 11 and how much? 7.5 R. That's bringing us to 37.0, and that's it. So that's a really nice trade. So this one would have worked out. Let's see if price will go higher or not. So now we are in the ODR session. So by the way, I don't have to mention that like that was my entry here, but there was like the entry over here again. So even if you don't take the first entry which I have taken, that would be the next chance for you. Then we go up, and like this would be also a very nice entry. So we close and we are rejecting from here, so that would be a next potential entry for you, just based on DR. Nothing else you have to think about. Volume imbalance, DR high level, we are going clearly above. We are taking out the sell side liquidity, the buy side liquidity over here, returning, and we are rejecting clearly. So any entry here, here in this candle, with stop below here would be fine. Even stop below IDR if you want to have a wider stop. Let's say you enter here, your stop would be here, 2 ticks at least below the DR, even if you want to put it below this volume imbalance. That's also fine. Target would be the same. IDR level still 2.5 R. So a lot of entries, not always the one I have taken is maybe even the best one. So this one could be like, if you take a crazy stop like I like to do, that would have been even better than my entry. But what I want to showcase you is like, even if you don't take this one, you get a next chance over here, and then the next big chance is at 1, 2, 3, 4, 5, 6, 7 chances to enter into this trade. And if you believe into early confirmation indication, you could have taken here the rejection from the opening price. That's another entry which would have been also very nice. So a lot of entries, not only the one I show you or I trade in the spec testing, there's a lot of things you can do on top of it. So ODR session we're having now. Let's see how this turns out. So we already had our squeeze. And so I actually would expect price in general. Now this area becomes important again, I guess. I would guess so. So let's mark it out. Same like the day before or the session before. So if we want to have really see a squeeze, we have to break these levels, in my opinion. So let's see what is happening. So let's mark out the areas for potential long entries. Opening price, we have these levels, nothing more interesting. Let's see. So it's 350, so 10 minutes later. Look, opening price, look at it. Random, right? Completely random. So we are expecting a squeeze to the upside. That's what we have seen. So you know what? I just take this long. So squeeze to the upside. We are going 2 ticks below the orange line. 1, 2 ticks below. Next target would be new high. We have equal highs over here, so let's have the target over here. I'm still not trusting this area up here, but technically now this one should be the target, because now there is so much liquidity up there. We should reach for that one for sure. So thinking about it, I'll leave it over here, 0.5, equal highs over here. Just mark it out. Zack. Buy side liquidity, and that would be another area. Buy side liquidity. So there's a lot of juicy buy side liquidity over there. Let's see how it will turn out. That was close, almost stopped out, but that's when people look at my charts and they don't know anything about DR, they are thinking why he's putting his stop over here. So everyone here should understand why it's over here, right? So we're going up, and I think it's time to, let's put our stop on entry. Close again, not stopped out, we are still in the trade. So we take the first buy side liquidity, which would have been a valid target. I'm greedy now because at the end of the day 37 hour and it's not even a week, so I can be a little bit more risky in my trades, because that's how we trade, that's how I trade. So again, this level important again, rejection again. So let's see. So now we are returning to the DR levels. Look at this. So let's see the next candle. Okay, I'm taking another long, so stop on entry from the first trade anyway. I'm gonna take 1, 2 ticks below. And same target 0.5. So this one is stop on entry. I'm risking another hour. Let's see how it turns out. So not stopped out yet. We are reaching the relative equal highs here. And we are ticking both trades. What a surprise. So that's 23 trades. That's 2 more winners. And that's 6.5 plus 6, 12.5. It's getting ridiculous. 12.5, it's 49.5 R plus. Makes sense to everyone, this trade, expecting buy side liquidity areas. You saw the importance of this area, we saw the importance of the buy side liquidity, and we take the low hanging fruit. So that's it. What time is it? 6:50, so still ODR. price goes higher. To see where we are. So the next areas would be now, this is taking out, this buy side liquidity is taking out, this buy side liquidity is taken out now. Let's see if price will go higher. I'm not interested in any more trades right now. So 8.15 would be a nice entry again over here, but I'm quite good, so I don't want to take another entry now. So there seems to be news. It's a Friday, so we are taking out everything over here. So news day. Let's see, the IDR news is over. Do you know what day it is? CPI? Okay, yeah. So price is returning over here. So we now have taken literally every buy side liquidity over here, and there is nothing left here to take. So this one is also almost taken. So the next level would be up here. Still looking on the overall picture, still looking like short. That was a fine squeeze into both directions. So let's see. Let's see what IDR is telling us. So early confirmation, but rejection from the DR levels. So we're not gonna trade this. You want to have a confirmation at CPI. If you trade on CPI, you want to at least wait for a confirmation. Okay, now we have a short confirmation here. So we are looking for short trades right now. It's the end of the week, it's CPI, so I'm gonna be careful with my trades. So we're reaching 0.5 standard deviation. We are rejecting right now from there. We go up directly to the DR levels. So I think I can risk another one over here. So let's see the next candle. Closing above, I don't like it. Closing above, don't like it. Well, that's too big candle, but it's confirmation. So let's take a short trade. I technically can lose here because it's a CPI day. So we're going two ticks above the IDR levels. Target, new low. It's not worth it. So no, I can't take this trade. Even if I go here, 1.3, no, I would have to go down here. Let's give it a try. 2.0.8, we are quite good what is in the stats, so let's try it. So we are making a new low. No, didn't. That's a little bit a choppy trade so far. So now we have a new low. I can't put my stop on entry because like that's in the middle of nowhere. But what I can do, I could potentially reduce my risk and put my stop over here. But based on this, we should go lower. So, but like here, my stop would be really in the middle of nowhere. It's not, if you see a little bit retracement back to the DR, I would get stopped out and I would have to enter again. So yeah, as expected, stopped out. 24 trades, loser 8 and 84.5. So like we said, CPI day anyway, not a trading day. So we go higher. Nothing to enter short, nothing. Maybe another short. Yeah, we have to try it, or I have to try it. So short, target new low and stop. We are very close to it, so we're gonna make a little bit higher, like around here. Yeah, let's put it here. Okay, so let's see. And stopped out, that's -2 in this session, that's it. That's also the last trade of the backtesting week. Winners, losers, 9 and 74.5. That's the end result. Let's just see how it plays out. Time 16, okay, yeah. So nothing big happened here. So that's it. That's 1 week. The first November week of trading. So we had 25 trades, is that correct? 16 plus 9, 25, 13 winners, 3 break even, 9 losers. So that gives us a statistic of a win rate of so that's 13 divided by 22. So that's 60% win rate. Quite impressive numbers of R. I hope, yeah, what can I say? I mean, I would have taken most of these trades, and I'm pretty sure I have taken some of them also on the live account, but that's how I see the market. Obviously, I would not trade every day the IDR session. No, I'm literally not trading the IDR session most of the time. So keep that in mind, that keep in mind that like all the ADR trades I would have not taken. I'm normally looking at ODR and RDR, but we are backtesting, so that's realistically all the trades I would have taken. So yeah, like it depends on, I'm looking at the price, not like either when it's 1 or when it's +2R, I have to put it on break even my position. So yeah, I mean, quite a lot of losing trades, like fields for me. Like my personal win rate is above 70% over almost 10 years now. So that was definitely more losing trades than I would have normally. But like, okay, it was a FOMC week and it was a CPI week, so normally I would not trade this most likely. So that would be 2 losing trades less. But overall, I mean, despite the win rate, I mean, I can only say, like, if you see it, you see it. If you don't see it, you don't see it. It's just what is happening. I'm not making this up. Everybody who studied my videos, everybody who watched my videos should understand why I'm taking the trades, where I'm putting my stop loss, what is the reasoning behind. Before this happened, we were talking about squeeze model or contraction model. What we expect a squeeze. So everybody can see this is a hell of a juicy squeeze. Yeah, right? So I mean, what could be better? It's just everything is reasoned, everything has a rule behind it, like almost everything. You're looking at price, and that's like that's what I really want to understand everyone this year is price is king. Price is the God. Price is never wrong. Opinions are always or often wrong. So I give you a frame to work with where you really can base your opinion about price based on really what is happening on levels. I mean, these areas, these reactions from the prices you have seen, which led to me taking trades, they are there. You can see them every day. So this is just all I can say. I mean, there is nothing more objective than looking at price action. And like if you look just like I do to the left, you see this volume imbalances, you see the levels on the left side, and you just look what price is doing. I mean, it's just 1 week of backtesting. So question, guys. Normally, if you're new, Steven, you should be not trading on the day of CPI and FOMC. It's just not worth it. They are all like Junior LOL. All the models are in my part 3 video of the DR, except the contraction model. But I just explained it to you, so I don't need to make a post. If R is $100, yeah, like okay, and R is whatever you are using. So if you have a 1 million account and you have 1% risk, that's 10,000. So you would have made around, yeah, you would have made 47% on your account value. So depends on you, whatever you want to use at risk. If you're new to DR, you can start with 0.5, 0.1% risk, 0.3% risk, whatever is okay with you. So I would normally trade 1% per hour, but my accounts are just a different account size, so I have to use a lower risk for mine, but that's not because I don't want to trade higher. It's just making me problems in I have to trade just too much contracts with this account. So my risk is 0.3 on my main account. So, but that's up to you. What is your risk? Important question. As soon as we get a close above DR, IDR, is that confirmation, early confirmation? Yeah, Carter, just watch my first video of DR, IDR. You find it on my channel. Everything is explained there. Close above the DR is confirmation. Close above the IDR is early indication. No, I don't trade with John Rambo in Chicago, so I don't know. The John Rambo I heard of, he's an Australian trader, so no, I didn't trade with him. Which broker do you use? I use Interactive Brokers. No, I will not release what I showed yesterday, the coding. Not yet. Most of the question answered. Thank you so much, Gabriela. Amazing, thank you. I will make sure that all the money which is coming in from the streams goes to a good cause. Thank you so much, really appreciate it. Do you use SPX data? Yeah, unfortunately for TradingView, if you go to the SPX, they don't offer CPOE data. So yeah, but the data is like I'm comparing them with my other trading softwares I have, and the data is quite precise. But make sure you take this one. So index CFD SP. This one is a little bit different, so I always use this one, and it's like almost identical with the data feeds I have from CPO. Thank you for your time. Remember Brutus. Yeah, we will do Forex next time. But like like Jose Carlos, the point is, you know, I really want to stick with ES. I will make one Forex, but for me, it's what I said in the beginning of the backtesting. For everyone who is starting with DR and maybe even starting with trading, ES is just the top-notch instrument to take. And I don't see any reason. If you have a funded account, every funded account is offering ES or SPX. I literally don't see the reason why going in. The point is why I don't like Forex. It's very manipulative, because too much counterparties, central banks, governments, and all of this stuff is involved in currency prices. So you have interventions from the central banks. The central banks can literally print money to stabilize. It's really something which you can trade, and of course there is a lot of action there and there's a lot of opportunities. But if I talk about probabilities, it's just not comparable with equity markets. And that's also why I choose ES. Even though NASDAQ or Dow Jones have sometimes crazier or bigger movements, but just see it from this perspective. The Dow Jones has 30 shares inside, 30 stocks. The NASDAQ has 100 and the S&P has 500. So what do you think is easier to manipulate? The 30 stocks in Dow Jones are the easiest to manipulate, right? The 100 stocks are definitely easier to manipulate than the 500 in S&P, and that's also one of the main reasons why I stick with S&P. It's all I'm doing has a very, very good reasoning in the back of my head, and it's not only in the back of my head, it's just data I gathered when I was working for the professional companies. It's just facts which I know, and you should know by now, if you're watching my videos and my streams, that I'm really looking to get the best edge I can get. Session was gold. Thank you very much. Yeah, thank you so much. Thank you. What about options? If you like options, trade it. If you know what you're doing, you can trade it. For me, there's no reason to take an option for the trading I'm doing, but you can do it, definitely. I mean, like, you know, the DR is also working for stocks, so you could potentially make a really nice model based on options trading and stocks trading. But it's not my bread and butter, to be honest. Indicators, these settings are standard. My indicator settings are as they come in the script. So there is nothing changed for me here. The only thing I changed during the session, I increased the lines of standard deviation, but that's literally when you add the indicator to your chart, that's the settings it comes with. I didn't change anything. Just you have to decide if you want the box color based on open price, but that's the only thing. It's very hard to tell. I'm sorry, I can't explain you when a whip is starting, because, you know, whips are a very basic mechanic of the algo, but I can't explain how it works. And even though I'm working on a script, but I would need the data I had as a professional trader. Like all the companies who are running the algos, they have different data set. So with this data set, I could calculate when a volume imbalance is important or not anymore. But as a retail trader, we don't have access to this data feed. So I'm working on a workaround, but generally, like, first of all, it always needs to get filled. And the second, after it's filled, it's still visible to the algo. That's what you have to keep in mind. It's always like, consider every volume imbalance as a point of interest as you do DR levels. That's all I can tell you. And rule of thumb, 3 times, that's what I already said. But anyway, like, look at the volume imbalance which are lining with the other levels, like this one. Look, these are important volume imbalance. This is a very important volume imbalance because it's lining up with the DR levels. You see? So look out for these areas. All you have to do when you're trading DR, look at price, analyze price, and look at the levels. You don't have to look here, you don't look for anything. You know? This is the next, like, once price is through this level, the next time you're looking is this level, which is the orange line. This, we are not interested. We don't care about this. This is just movement. We want to look at the level where the algo is deciding the next time if you want to change direction, and that's DR levels. If there is a volume imbalance on top of it, that's it. Yeah, of course it's my real voice. What do you think? You think I'm using a voice, whatever? No, it's my real voice, of course. Join the Discord. Just any video of mine, just check in the description. There is the link below. discord.gg/themaster. Talk about the VFP? No, I'm not talking. You know, everybody is asking me what does VFP means, and I literally didn't know how to name the script, so I just called it VFP, and the idea behind was very profitable. So no, but like I'm not talking about this anymore. It's early. And I will never be able to release the script because I would break my NDAs, so don't worry about it. Maybe I will find a workaround. Let's see. You said after 3 times a whip behaves like a gip. Yeah, it's literally, but there's no rule, because it's not. It's really rule of thumb. Call it a rule of thumb. Moonlight and sunshine. I spend literally in average 8 to 12 hours in front of charts, and that's for 20 years, so I quite have some hours on my back. There is no good, and like, I don't know, show me an example of a bad rejection. I don't see bad rejections. Like, rejections are the most objective point to look at. What you have to understand that, like, rejection can look good until they not look good anymore. So, but there is no good and bad rejections. And like, what you don't want to see is the circling around. You have to understand the combination. So this rejection over here with the confirmation, and like, this is just like, study more. That's all I can say. If you study more, you will not come to the conclusion that there are good and bad rejection. They are just simple rejections. And at one point you have to base yourself. When you ask the question good and bad rejections, it just means you are not ready yet to execute, because there is no good and bad. And you only will figure out once, or you will only figure or come to the conclusion that it was a bad rejection because market is going against you. And when the market is going with you, you will call it a good rejection. But in a live scenario, you never know that. There is a point where you look at price action, and then you just have to hit the button and take the risk. If it goes against you, you lose 1 hour. But I think it should be very, very obvious that there is a lot of margin to lose trades in this system. So even if I would have 20 losing trades in total, still I would be up 27.5, you know? So don't think about good and bad, just price reaction. And in a live scenario, we'll always come to the point you don't know if it will be a good or a bad rejection. You just simply don't know. And you take the trade, and afterwards, of course, you can talk about good and bad rejection. But like, this is a mindset thing. The people looking for the 100% mechanical rule, but there is not. I mean, it can't get more mechanical as what I gave you. But still, at one point, you have to say, I see a rejection and I enter the trade, and if I lose, it's fine. It's completely fine. Look at this. Even with 30 losing trades. I could have taken randomly stupid trades, and we could add this up to 30 losing trades, and I would be still very profitable. That's just the power of the DR. I don't tell you to take stupid trades. I'm just like, there is no good and bad in this one. Okay, so that's 3 hours, guys. I need a cigarette. It's 1 a.m. in the morning for me. I'm gonna talk to you tomorrow. I hope you enjoyed it. And I hope you like it. And 2023, it's gonna be crazy. Promised. Have a good night. Love you guys. Talk to you soon. Bye bye. And everyone, I didn't see everyone who was donating something. Thank you very much for everyone. I love you guys. I really like it. And talk to you tomorrow, okay? Bye bye.